Bitcoin falls down into the 79Ks exactly as predicted. Is this the beginning of a huge flush down, or are we just consolidating before a big explosion up? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 6 p.m. Eastern time and the price of Bitcoin is currently at 79,700. And before we go over the top-down analysis, I want to go over this winning trade I gave you guys yesterday on the 1-hour chart. I was telling you guys I see a head and shoulder pattern, left shoulder, head, right shoulder. Give you guys this entry at around 81,450 with the measure move taking us down to about 79,600. Not only did we hit that, but we went as low as 79,500. That's about a $2,000 move. So congratulations on whoever took this trade. This is a big win for the FlexCandle community. We're starting off here with the weekly chart. This candle closes in the next 3 days and 2 hours, and we're still green here. We're still above the 21 moving average, which is at 76,774, but it's not as green as yesterday. We lost a lot of the body and we're starting to get a larger wick that's showing more rejection here. Now the stochastics are getting toppy. We have to start anticipating, are we just going to start rolling over here, lose this 21 moving average, and all of a sudden get back into this bear flag? If we get below this 21 moving average, we'll be back into this bear flag. By the time you know it, we could lose a 200 moving average and be down to about 45k. We have to be ready in case that happens. Right now we're still above the 21 moving average. Let's see how the candle closes in a few days. We head over to the 5-day chart. This candle closes in the next 3 days and 2 hours, and right now we're getting a rejection. It's a red candle. This could end up being tweezer tops, and tweezer tops, as you can see here, usually drops us down. We're still above the 200 moving average, still above the 21 moving average. So for right now, we're still doing okay. We're still bullish. On the 2-day chart, this candle closes in a day and 1 hour, and again, this could end up being tweezer tops. They start rolling over. We are far away from the 21 moving average. That's at 74,273. Now, I was excited yesterday because the stochastics were rolling over, and then we got a pump back up here, but now the stochastics look like they want to roll over again. The RSI is starting to get rejected. It does seem like we could head towards this 21 moving average. Right now we're holding the 80 moving average at 78,540 as support. If we break that, we could end up falling down lower. Now on the daily chart, I told you guys we were going to make it towards the 200 moving average. That happened, and I also told you guys we were going to reject once that ended up happening. It's very rare that we break above the 200 moving average on one shot unless we're extremely bullish off some crazy news. And today we're getting a red engulfing candle. Now the 21 moving average is at 77,726. I would say that 77,500 is the line in the sand. If we lose that with strength, we're probably going to head down to this 50 moving average, which is at 73,243, and that's going to be horrible because we're going to lose that 76k support that we worked so hard to get above, that 74k support that we had to fight various times. So hopefully we could stay above this 21 moving average. Now the stochastics RSI are toppy here. The RSI rolling over, so unless we could roll back up, we have to hold above this 21 moving average. On the 22-hour chart, we see that we still have room to continue coming down on the stochastics RSI. Now the 21 moving average is not too far away. It's at 78,600 basically. Hopefully we could hold above that as well. On the 8-hour time frame, stochastics also on the way down, and we're starting to test this 200 moving average. That's at 79,686. This is going to be a very important level. If we lose that, then we need to hold this 50 moving average at 78,300. Now on the 4-hour time frame, we lost the 21 moving average. That's bearish. The stochastics RSI are on the floor here, so at some point we could go back up, but we could also drag here for a little bit and see lower prices. Now it's very important that we hold above this 50 moving average, which is at 79,116. 79k is a very important level. We do not want to lose 79k. Then that starts opening up the floor for 78k. We lose that, you guys already know it could get nasty. This was that head and shoulder on the 1 hour that ended up breaking us down. We're going sideways here. This could end up bear flagging, and then all of a sudden we could drop down to this 100 moving average. We for sure cannot lose this 200 moving average. That's at 75,512. We lose this 200 moving average with strength, we're done. So we need to be held up by this 100 moving average, kind of like what ended up happening here. Now on the 1 hour time frame, stochastics are low. It looks like we're rolling over again. Maybe we could roll back up. This could be an inverted head and shoulder here on the stochastics RSI, and we could blast up. Maybe we could do a double bottom here. We already lost all the moving averages. The last line of defense is this 200 moving average at 79,000. If we lose that, things could start to get a little ugly. So we need to make sure that we stay above this, and hopefully this could end up being a double bottom that brings us back up at least above this 100 moving average. And on the 15-minute time frame, the stochastics are low. We're starting to point up. The RSI is pointing up, but we're having trouble getting back above this 20 21 moving average. That's at 79,990, basically 80K. If we could get back above the 21 moving average, and if we could get back above this 200 moving average, then things look a lot brighter and a lot more bullish. So overall, guys, we would have to technically get back above 80,600, I would say, to remain bullish, and then we have to work our way back above 81K and ultimately back above 82K. But I would like to get back above at least 80,500 to at least have some chance of doing that. Now, the level that I feel like we must hold is going to be last resort 77,500. We lose 77,000, I see us possibly coming back down to 76K, probably to 75 or even lower. So I think that the line in the sand right now is going to be 77K worst case scenario. If we could hold above 78,500 or above 79K, I think we have a shot. It is Thursday night. Friday usually is going to be low volume. Then we head into the weekend. Usually this has been happening the past couple of weeks. We kind of drag Thursday, Friday, Saturday, and then all of a sudden Sunday for the weekly close, we end up getting a nice pump. So let's see what ends up happening. Right now, I'm still overall bullish on Bitcoin unless we start to lose that 77K level. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.